refreshing a new pen, rewriting the story. Hello to my old ways, goodbye to the nosebleeds. You fighting to stay here, you probably ODing. Ain't finna pop for no reason. I don't throw shots, I run legions. I've been going over the top with no queen, been down with no regrets. This is my season, it's the bow trigger. Gift that keep giving, nothing to wrap up. I ripped a new ribbon, they wanted to catch up. Wanted my good riddance, you saw me at rock bottom. You wanted a new winner, I paved the way for 'em. Take the pain, double it, put it in way form. Safe to say, trouble ain't what you was made for. Keeping a ring on, I told them all game on the minute I came on. So that I wanted to lose my mind. No question if it's wrong or right. Ain't no way to tell which way it's gonna go. Yeah, yeah, yeah. So that I wanted to lose my mind. No question if it's wrong or right. And now it's too late. No way to take control.
All right, hello everybody. Thank you for joining today. Let's go ahead and get started on BTC here. What I'm going to do today is just give you guys a quick walkthrough of kind of everything we've been looking at, talk through planning from next week, early planning on BTC, NQ, couple stocks, that sort of thing. It's been a while, so I wanted to hop in here with you guys and just kind of explain some of our framework for the people who are new to this, don't understand AMT, interested in Orochi, or just simply, just looking for some free alpha, right? So let's go ahead and get started here. Let's actually start from a blank canvas here, and then we'll kind of walk through this, right? So for those of you who don't realize or understand kind of our framework or familiar, we're going to just kind of build this out together, right? So this is Bitcoin on the 2-hour chart. Let's go ahead and just switch to the 4-hour, and we're going to take our good friend, the fixed range volume profile. This is going to give us a overall picture of what we're looking at from a value area range perspective, right? So we have our value area high, point of control, and the value area low, okay? So this gives us a good context of where price is rotating through, who's in controls, buyers or sellers, and where most of the volume has traversed through this value, right? And you can clearly see right now we have obviously spent a lot of time at the point of control. So price tends to spend a lot of time at the point of control. So that is a very good indication of where to trade, when not to trade, how to trade it, right? In some contexts, it's good to trade the point of control. In some contexts, it's not, right? For example, this morning, it was a very good, trade to look for a long setup, in which we did take a long setup from this morning at the point of control. But before we get into that, let's go ahead and kind of just dissect some of the overall stuff that's happening, right? So if we go out to the daily, right, we give ourselves the higher time frame. All right, Bitcoin had an all-time high. We're in an obvious downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? So in this perspective, right, we can say that we are obviously definitely in a bear market on Bitcoin, right? Locally, though, we've had some good consolidation. We got a good value built up. This is about 45 days of value, give or take, right? 45 days, okay? So with that being said, let's go ahead and just kind of say, well, what is going on Bitcoin? What do we have? So we always have our MPOCs. Where's kind of the overall stuff happening on the, I find this on a toss, right? I use a toss. So if you guys don't know what a toss is, it looks like this here. This is a toss. A toss gives you good order flow data. It gives you your kind of daily volume profiles, weekly, monthly. This is kind of my workshop, my bread and butter, right? So when I go and look for naked point of controls, right, I look for, all right, where do we have yesterday? Yesterday we had a previous date point of control, 64.0550. So let's go ahead and mark 64.0550 on our trading view, and then just kind of see where price is at, what this looks like, right? So that number was 64.0550. And we're going to put that as a MPOC. All right. Now we can clearly see exactly what just happened on BTC. Now there's two things locally I want you guys to pay attention to. Okay. So we had our swing high, right? Basically for this whole week, and it was kind of just ranging, creating higher highs, higher lows, but we had some good compression up in here, right? And ultimately we had some bearish momentum, back test of value area high, in which that was a great short trade, right? So we take the short trade off of the value area high back test, and then we look to trade this back down, take a TP1 off point of control, right? And now we're at the end of the day, right? Where we're at here is where we're at the naked point of control from yesterday's previous point of control, and you can see the level of respect that this has, right? So it just tapped the daily naked point of control of yesterday, right? You got another confluence factor where you take the VWAP. So we take our anchored VWAP from the all-time or the swing high, right? So we just place it at the swing high. You can clearly see, boom, we have two really big factors here. One, yesterday's naked point of control. Two, the anchored VWAP. Now this is just very, very easy, simple analysis, technical analysis, but you can see very clearly how respected this is. I mean, you zoom into the 3 minute, you can see exactly to the dollar, NPOC tap rejection, flip to resistance right now locally, and then we kind of start to look at our opens. Well, we have a daily open and a weekly open, so I would imagine that we kind of have a good scalping opportunity. You can look for a daily open retest, and maybe, you know, if we get some constructive price behavior, make a run back up to the value area high, right? But that's just kind of a very quick down and dirty of what we have going on in BTC locally, right? So if we kind of look at something like that, that's very simple. That's a TP1, right? From if you take a long position off the point of control, right? Then you have a naked point of control. That's a very nice 2% trade from the morning. Good day on Friday. Pay yourself. Then, you know, you have a hedge position from a short at the value area high, you have a long at the point of control. So we're simply just playing the values, right? And we're looking for confluence at each of these values, right? There was basically a daily open. So if we look at this short setup, it's kind of playing the initial balance, right? So if this is a daily open from, this was Thursday, right? So daily open, back test of value area high, loss of value, come back test value area high, daily open, rejection. That's when we take the short trade. Very simple, right? You're saying we are accepting back into this 43-day value. We're going to rotate back to the point of control. We rotated back to the point of control. We look for a long setup. We take the long setup, and now we look for a long back to the value area high and confluence back above, right? So it's very simple, and we're just kind of playing both sides of the trade here, both sides of the value, and so on and so on, right? So let's kind of go ahead and dissect where's the next good trades to look at for BTC in here. We can use a couple different things, right? I like to use opens. I'm always tracking weekly open, daily open, and monthly open, right? And the monthly open was a very good thing to look for a trade, right? You have a good initial balance on the monthly open, and then that bodes well for a nice swing long. So we also have a swing long down here at the monthly naked point of control at 58,000. We SFP'd that once, came down, gave it another tap, and then obviously had another bounce back up, back into value, rotate to value area high. And that's a good, you know, capture on, you know, a good solid 11% that we've captured on this long trade. Now, obviously, my goal is to trade this back up and above, right? Because we have a bigger, larger value, right? So just as we have a small value here, we have a much larger value in this position here, right? So if we look at the same thing, fixed range volume profile, we take the overall value of this range and we look at, well, where are we at in this context, right? So it's a very simple trade idea, right? You look at lower confluence, you look at a monthly naked point of control, a couple dailies, maybe a weekly down here. You actually have a larger 618 pocket. I don't believe I have this up here right now, but basically it's really simple, right? So if just plain and simple auction market theory, rotation of value area low, rotation of value area high, point of control above value, try to, you know, fill this in balance, create some value, ultimately reject, come back into value, come down to value area low, reject point of control, back out of value, right? And then we take the long. We look to play this up to the point of control, and then obviously to the value area high. So we're just playing the rotational environments within AMT framework. And then obviously, you know, you're sprinkling things like the, I'll show you a glimpse here of the overall Elliott wave, right? So if you have Elliott wave theory, right, and we've had our big structural 1, 2, 3, 4, 5 waves down, that's your 5 waves. Your 1, 2, 3 correctional, that's your 3 waves. We're now working on the 5 wave structure, so that's a 5, 3, 5. And when we zoom in locally here on the 4 hour, you can really see in the white count, right? So from our high of 82K, we've had a very good Elliott wave count, right? We have 1 and a regular flat 2, a very impulsive 3, a 4, and then a 5, right? And at the 5, that's where we looked for the long setup at the monthly naked point of controls and previous values, right? So there's a lot of things happening from a directional bias. You're playing the AMT framework, and then you're executing on a lower time frame in order flow, right? So at the end of the day, you're saying, all right, well, we have a clear 5 wave structure in here, but that sets us up for a larger wave 1, which is the order count the orange count, right? So this is your orange count. So you're basically saying, all right, I have 5 waves in this one structure. I'm looking for a larger retrace wave 2, which is correctional, right? You can clearly tell the difference, right? This is a correctional structure because it's choppy, it's overlapping. This is a motive wave sequence. This is a motive wave sequence. And now this is a correctional sequence. So, and you kind of expect something like this, maybe we get something like this. It really just depends on how the correctional plays out, right? Correctionals are very choppy, right? So when you have something like this is the justification of having, you know, it's a good probability to trade this back up into this larger value. Maybe you target the value area high, maybe you just target the POC, and then you look for the shorts, right? Either at this value here, or you look for the shorts at value area high back up if we obviously trend back up higher, right? And then you play the wave 3, right? The larger wave 3 back below this value. And when you can clearly see on any time frame, on any, you know, heat map, there's a ton of liquidity right below these lows, right? So that is kind of the reason and rationale for having swing longs here, playing the longs in a larger, smaller frame, right? So it's very, very simple, right? You even have swings, right? So myself as a swing trader, Tyson is intraday. So Tyson is trading all of the smaller moves within, you know, the 15-minute, the 5-minute on these BTC candles. He's looking at the smaller ranges, playing the ranges in this rotational value, right? That was a really good range to play if you're intraday scalp. Myself, I'm looking at higher time frame swings. So in terms of, you know, swings that I have open, I still have a short from, let's see here. I have a short from here, right? 65,000, 66,000. I've pretty much juiced it, right? But you kind of leave a runner in case, you know, obviously we have the trending market structure still intact, which is lower low, lower high, lower low, lower high, and now we look for the lower low play, right? So that's kind of why we've taken the short here at the lows, or the lower high, and then we have the short from here at this lower high. So you're kind of baking in a simple market structure, understanding the narrative, understanding the market bias from Elliott wave context, understanding overall things like you know, the AMT framework and so on and so on, right? I'm going to post a video today showing you guys, this was kind of requested a lot, but just the overall like fibs, how to trade fibs as well. And if we kind of just dissect, like if we go swing low, right? If you guys are, and for who people don't really, you know, use fib retracements, we're just using the fib retracement tool here. We take the swing low to the swing high, and we're just simply looking at where the Fibonacci ratios are. You can clearly see today, right? We bounced at the 382. That was our low pivot. And then again, coming back into this value, that was also the 45-day point of control value, right? Not only do you have that, right, you have a few things happening. You have the monthly, right? So if we look at our opens, we say, all right, let's take a fixed range volume profile, right? From the monthly open, this is what you get. This is your monthly profile. So you can see how well respected the monthly profile is as well, right? You have the monthly VWAP, which actually this is the wrong monthly VWAP. I don't know why it's up there. Let me change this real quick. So if you look at the monthly VWAP, place this at the, oh, it's locked, that's why. Place this at the monthly, right? You can see today as well. It's kind of basically the same as the swing low AVWAP, but it's the same. Here's the monthly VWAP acting very, very nicely as dynamic resistance and support, right? For this case, it's just support, right? You got to bounce there, bounce there, bounce there, bounce there. Just super clean. Why not play that until it breaks, right? So that's your monthly naked point of control. It also bounced off. You have the 45-day point of control, right? You have so many things. You have your Fibonacci, your golden pocket that it bounced off of. So this is a really good level to be looking at for trades, and Bitcoin has been trending very nicely in this zone. And you can see just how very, very perfectly that bounced. So looking at all of these technicals combined can be such a very, very easy tool to obviously, you know, get yourself in a good position and play the lower highs, play the lower lows, even on the bigger pivots, and know when it's likely to pivot, right, from Elliott wave, and then counting the overall AMT framework in here as well. So that's just one piece of the pie. When you're actually executing, you have your order flow. So let's go ahead and look at order flow and just say, all right, well, here's what we have from the monthly naked point of control, right? So again, just backing out real quick, this is the monthly naked point of control at 62,729, right? It's a little bit different on a toss, right? Because you're actually getting the footprint, the delta, the volume, like in real time. You actually have all of this instead of the aggregate. You have the actual, you know, minute data on this. So when you look at the monthly naked point of control, that's exactly where we bottomed. And we've done this across basically every single high or low, right? You can see it across the board. But from this morning at New York Open, we come down and we flush in with very, very, let's actually back up real quick, right? So from our, you know, our swing high, we've had nothing but, you know, pretty aggressive selling, you know, negative delta coming down into this, right? So that takes us to our monthly naked point of control. And at our monthly naked point of control, we have a lot of like shorts piling into big support, right? Because you have your swing low A VWAP, you have your monthly VWAP, you have your 45-day point of control, your monthly point of control, your golden pocket. So that is a very good support level. So when you look at this on Footprint, you're saying to yourself, you know what? Like if I see Delta flood in and we got it really aggressive, like look at the volume on these candles, right? 2 million, 5 million, 13 million. It's kind of like tapering off. Like volume is coming down into a very exhaustion state, right? And then you have New York Open, big boys show up, 24 million. You have negative 14 million Delta puking into the monthly point of control. So shorts are opening up at the monthly point of control. To me, that's a pretty red flag in terms of, okay, shorts are getting really aggressive into great support. Let's see how this reacts. And obviously you get a good reaction when you zoom into, you know, lower time frames like the 15-minute, right? We're in the hourly right now. So this is the hourly candles. But you can see clearly, right after that, you had a bigger flush of volume and then a positive Delta expansion on that move. So shorts got immediately trapped. And then we had a short squeeze up, buyers ultimately stepped in, and then we're continuing this push up, right? So now we're at the weekly point of control, and last month's previous month point of control, we're at the weekly VWAP, and so on and so on, right? I walked you through a little bit of like where we're at right now in terms of the previous day point of control. So yeah, that's really one of those things that we kind of look at in terms of where the market's going, what we can do with it. Let me show you guys a little bit of the Discord today, right? So we have, let me see here. We have the overall, that's equities chat. Let me show you a little bit of my channel here. So let's go to my channel. All right, just want to make sure I'm not exposing some of our alpha, right? So we have some of our trades. So this is my channel, right? I'm looking at, this is my outlook saying, hey guys, you know what? We have a big opportunity number one here from the point of control, right? This is yesterday. We're coming down very nicely, almost at the point of control, saying basically, opportunity one from the market update that I did, right? So I do the market update on Thursdays. Small risk opportunity, right? If we base again another higher low here and print another higher low, you know, otherwise we're looking for a larger rotation down to the value area low. But we did have a nice flush of Delta and volume as I just walked you guys through. So you can come down into this and basically see, you know, very, very good footprint. So you take the long if you're interested, and then you ride this back up to where we're at right now. It's the same thing kind of what we're doing with NQ, right? So NQ, we've kind of been very, very patient on, let's go to my other channel here, very patient with NQ. We've taken the long at NQ, right? And we rode the short very nicely down on the NQ play, and then picked up longs back at the weekly. So just having a very solid plan for the members, and then, you know, showing you guys the ropes of how to form a plan, what it looks like, how you can be very dangerous with something like this and just be profitable, right? So Bitcoin's obviously ripping. If it takes us to NQ, let's go to NQ, okay? NQ is basically in the same state. We're doing the very same analysis on NQ, right? We're taking a fixed range volume profile from all of the data in this range, right? We got a few things happening. Like I like to personally take an anchored VWAP from major pivots, and this is a very, very major pivot, right? This was a very high volume play. This was a very large extension move up to the upside. So that VWAP has come very nicely into this level, right? So you have a daily, you have the golden pocket, 61866, and you can see the reaction in real time of just how beautiful and just amazing this technical analysis can be when you just have AMT, volume trading tools, and then pair that with a couple, you know, daily, weekly, naked point of controls, all that, right? And then, you know, obviously you just have a plan in place, right? So we're saying, you know what, in terms of what is market structure doing? Well, we have, this is our ultimate high. We didn't take the high. This is a lower high, lower low, right? Lower high, lower low, lower high, lower low, right? We didn't even take this high. So that's a very technical failed of attempts to take the high. And at that point, you said, you know what, we have the weekly open that we back tested there. That's almost at the value area high. We didn't even take it. We didn't make it up there. So sellers are definitely in control. So we're going to say, you know what, if it breaks down further, right, we're going to take a short trade, place our stops above the lower high. You can place it here or here, just depending on your risk and how much you're risking, and ride this down because it's very likely from this market structure that we're going to have another lower low to come. And this is what the value area low, right, of this entire range. So you're saying, you know what, this is a rotational environment. It's very likely the highest probability is that we're going to come down to the value area low. You pair this up with the anchored VWAP, a daily, you know, your 618 back test. We've done a YouTube video on that. Go ahead and check that out if you're not familiar with that. But at the end of the day, this is really simple stuff. And then you're saying, you know what, I will look for the long setup. I will take the long setup upon the reclaim of the overall value area. Actually, this is an old outdated one. This is my current entry, right? So we're just basically saying this is the value area low. We got the retest when we come into this, right? So we take the acceptance into this. I did it a bit aggressively. You could have definitely entered here, and then you'd be up in this position. And at this point, you can say, you know what? I'll move this stop loss to break even. I'll put it below the lows. I'll keep it where it's at. Just depending what you do, right? And so for me, what I like to do is say, you know what? I've taken my entry at the long, but what I do is I keep my short. So I basically juice this short, but there's about 20% left in this short. This is a good 6R short trade. I close 80% of this, but what I like to do is say I'm comfortable leaving 20% of this position here, and I'm going to take the long here. And if price comes back down below and stops me out, that's fine because I still have protection of that short, and I'll simply happy TP, right, the rest of that 20% at my stop loss on my long, ultimately mitigating my losses and still having a very good green trade on that. So it's kind of playing the hedge. It's the same thing on Bitcoin and why I like to keep positions open, right? It's the same thing here back on BTC, right? If we look at both short trades and long trades here, I'm short from the value area high, long from the point of control, right? So if this kind of, I TP1 off the short, so I have the short trade, right? I take profit on that. It's already a winning trade. I set my stop loss either break even, or I just say, you know what, I'm going to keep it above the range in case we kind of do one of these where we come up into this, right? And we just make another lower high and come down. That way, one, you have the short still running. Two, I have the long. Now I've taken TP1 at the daily open, weekly open, and I look for higher. Whichever one gets stopped out, right, the other one is going to make money. Whether the long prints, the short gets stopped, whether you place it at break even or just above the highs, your long is still going to win you, a profitable, trade, right? Whereas versa, if the long gets stopped out, right, I've already taken a TP1. So if this kind of comes down, break even, all right, the short is still running, right? And now we play the range to either the value area low and try to attempt to swing it down to the, the ultimate lows that we're at right now. So it's very simple kind of rotational plays playing. Same with NQ, right? So what do we do now on NQ? Well, we simply just be patient. We let the stop loss and the limits do its work. So I'd love to take a TP1 at the daily open right here, right? This would be a nice trade. And then the point of control, the value area high, and then look to swing this back up above the ultimate highs, right? So a very simple thing, auction rotations, and so on and so on. So really kind of what I'm looking at on a daily basis and what we're kind of doing here in Orochi. Would you say, I'm looking at comments here, would you say you need order flow for execution? Yeah, I would say for order flow, right, you want to make sure on any execution, let's go back to order flow, right? You can't get this level of execution on, I'm sorry, you can't, and a toss is actually kind of broken right now. So if you see, I have to refresh every single time. A toss did something with their API. I don't know what they did, but their order flow doesn't update in real time. And I play for, one of the top plans on a toss. And I actually canceled it this week because I think I'm going to switch over to XO charts or MMT because it just doesn't refresh. And the reason is, to answer your question, would I say you need order flow for execution? Yes, you 100% need order flow for execution, for sure. You 100% need order flow for execution. There's nothing in my mind that says there's no reason why you shouldn't be using it, right? Because you can get a level of data that most people aren't looking at, and you can see exactly where people are buying and selling and at what, critical levels, right? So at this point, you have the previous month point of control and the weekly point of control. If you have a lot of negative delta, but it's not pushing price down and price continues to go up, well, shorters are aggressively trying to defend this position, but they're not doing a good job, and buyers are still active and pushing price up. Well, we just stay in our longs, and we still look for higher, right? Vice versa, if we have negative delta showing up, we start to see a major rejection here, we could say, well, it's probably a good run up, good bounce. Ultimately, we're probably going to go lower, and it helps you stay in those, longer short trades for longer, and you kind of see, all right, well, if we come back down to the point of control or the value area low of this 45-day range, you can simply have really good accurate read of, like, should I take this trade or should I not take this trade, right? Let's say we come down to the value area low, right? Let's say let's go back. Where's my trading here? Yeah, let's say we come down to the value area low here, right? And there is just so much negative delta on the footprint. And there's no buyers. I'm not going to take a trade there at all because it's an area of interest, right? There's a lot of things that I'm looking at there. You have a weekly naked point of control. Let's do this. You have a weekly naked point of control. and a weekly, right? I'm going to be looking for the back test, right? You also have this right here, right? You have, let's get rid of this, the 61866 from the swing low to swing high. So it's a very good level to be looking for a trade at, right? But ultimately, if we come down into this level and it looks like shit on the order flow and shorts are just super, super aggressive, but they're doing a good job of pushing price down and we get a back test and shorts are still heavy, there's no buyers, then I'm not taking a trade, right? There's no trade to be had. So yes, I think you absolutely need order flow because it's gonna help you have a really good time in executing smaller time frames, longer time frames. It's gonna help you understand exhaustion, absorption, who's in control, and you know, whether you swing like me, it's gonna help you stay in those longer term swings and continue to juice that move for sure. So yeah, definitely practice order flow. My framework is very simple, right? It's 3 components. One, it's Elliott wave theory, right? If you don't understand Elliott wave theory, I've done a few videos on YouTube. Go ahead and check it out. Elliott wave theory gives you the directional mapping of where price is going to go, right? It measures the consumer psychology, which is repetitive waves that happen in the markets, and it's proven on any asset, and it's done me a very, very good job in how I'm able to, you know, make my trades and stay in my trades, right? So it measures the market in terms of waves from consumer psychology. It can tell you where exactly price is going to go, and you can measure that out pretty well, right? So that's your directional bias. Then I use auction market theory within that directional bias to say, okay, here's what Elliott wave is likely going to take us, right? And from there I can say, well, within that wave count, right, if we have a wave 3 or wave 5 likely ending in here, I know that we're building out value, so it's very likely that if I take a long at the value area low, I can probably swing that up to a good, you know, percentage trade, which we ultimately did. So you have your, again, Elliott wave theory for directional bias. You have your auction market theory to tell you who's in control and where. And then you have your third component, which is, yes, your order flow. You absolutely need your order flow 100%, because once you get to, let's say, this point here, right, at your value area high at that period of time. So when we kind of zoom into this level, again, this is a 2 hour, you're looking at the 15-minute and you're saying, well, what's happening on order flow? And I bet you if you go look at this moment in time on order flow and you're saying, you know what, we're at the value area high. All we need to say is, are we going to break out a value area high and look for a new value and fill this imbalance? Or are we going to come back into value, accept back into value, right? And ultimately rotate back to the point of control. And if that's the case, you say, well, I'm going to look for shorts. Here's my plan. What's the order flow doing? And if the order flow is aggressive sellers up here and buyers are nowhere to be found, well, you can bet your ass that it's going to come back down. That's a good, you know, thing to have, because you just know exactly what's going to happen next. It's your execution. It's your trigger, right? Otherwise, you're kind of just trading blind. You're just basically saying, yeah, 50-50, you know, maybe I'll just trade the candles, right? You can still do that. And I did that for a while when I first started trading. But when I found order flow, it just took my trades to the next level, because you can see everything, right? You're no longer flying blind. You're just seeing everything for what it is and where it's at, right? So that's my take on BTC, right? You know, there's a lot of stocks I'm looking at. In terms of Bitcoin, I kind of talked about where the next trades are. I think just from where we're at, right? So if we take our value area high or our fixed range volume profile, right? We're in this rotational environment. But what's outside of this is kind of where I'm looking, right? So if we have a weekly level here and we kind of come up, we sweep these highs, we take the weekly open or the weekly level, and we kind of flip into something like this. This is exactly where I'm going to be looking for my next short trade, right? Because if we have a failed auction, that's level number 1. Level number 2 is the ultimate highs back up here, okay? Which I think is more likely, because you have, let's see, your point of control basically sitting up here from that larger 100-day value, right? So when we come back up here, we get out of the value and we make, you know, one of these SFPs, and you look at the order flow and it's bearish, then I'm definitely going to look for that short trade, right? And if that's the wave too high on Elliott wave theory, then we can definitely assume that we're going to have a very, very big move back lower to lower 50s, and you can have a very favorable swing trade, right? And it's a very relaxed style of trading, because I know kind of the possibilities, right? Now, if there's no reaction here, let's say we come up to this level and we reclaim this level, and then we have one of these, then I'm not taking a single short trade, because just as we came down fast through this imbalance, we can quickly come up just as fast. And where's the next level of value? It is definitely the value area high at 74,000. And at that point, you say, well, what's at 74,000? Well, there's a lot of stuff there. Naked point of controls, a lot of resistance right here, right? So you have a very favorable framework to say, right? If this, then that. If it reclaims this level, no shorts until 74,000. In that case, I ride my long all the way up, right? I take my long trade from this position. I look at the value area high. I stay in that long. I continue to make money. That's a 30% move. Easy peasy, right? And then I look at the order flow and say, all right, now we kind of have sellers showing up. Now we look for the short trade, and we look to trade that back down to lower than our lower lows, right? Because that's how the Elliott wave mapping gets us there, and the rotational values that happen through this, right? So very simple for sure. Do you use fib extension for wave counting target? Yeah, for sure. I'll give you an example. So if we go back to, I do all my mapping on Coinbase. I think it's very clean. You don't have some of those wicks, right? So if I do my Elliott wave mapping, we can do a few things, right? We can say the fib retracement. Let's do this, right? You can say from wave 1, right, to the height of wave 1 where it started, to the bottom of wave 1, to the top of wave 2, and you look at your extensions. Wave 3s, right? So if this is your wave 3, right? Wave 3s typically, they typically run to the 1 to 1618, but this is a very aggressive, right, wave 3 in a larger count, so you have to extend those, and you basically do it to the 2 to the 2618, and you say, all right, where's the 2 to 2 to 618? Where's my 2? Where the hell's my 2? Well, here's the 2 to 618, and then we can just say, here's a 2, right? And you can clearly see from the 2 to 2 to 618, so that's basically saying instead of the 1 to 1, you're taking the 2 to 2. And you can see exactly how well respected this is happening, right? So if we just get rid of this value here, you can clearly see like 1, we kind of respected that 2 a little bit, but ultimately the low was the 2 to 2 to 618, right? So that's your wave 3, and that's how I know it's kind of wrapped up, right? And then you have your wave 4, and your wave 4s comes back into the retracements of, all right, let's measure from the height of 2 down to the wave 3. We look for a 382 or a 0.5. We've tapped a 382. We've made our 3-wave ABC structure. Within there, we have an ABC. So this is your WXY. There's your top of wave 4. And you look to short that down to, you know, your wave 5, right? And within there, you have your 1, your 2, your 3, your 4, your 5. Boom. There's your 5th wave, right? There's your entire 1 count. That's wrapped up. That's terminal. And that's exactly why I took the long at 58, and I looked to trade that up, right? And now it's just a matter of where can this wave 1 go? It depends, right? So let's look at, instead of this, because it's still unfolding, this is your wave 5, right? And this is your larger WXY. Basically the same thing that we kind of saw in this frame here, right? WXY, correctional 4, WXY, correctional, right? Same thing. When you take the Fibonacci trend-based extension tool, you say from the lows of our terminal 5 to the highs of our W wave to the lows of X wave. Let's go ahead and see where the 1-to-1 extension happens, right? Here's the 1 to the 1618, right? You move this over, and then let's put this on log scale. All right, so we move this over. So all we're doing is from the lows to the highs to the back to the, you know, extension pivot that we have here. And we're basically saying, let's look at this on log, right? Basically saying on log scale, right? We have tapped the 1-to-1 extension. That is our B wave structure, right? Again, so we have our 5 wave, 1, 2, 3, 4, 5. That's an A wave, right? Because it's a correctional environment. We're looking for the larger wave 4, right? Down here somewhere. We're looking for the 4, but this is just ultimately a large ABC, but you still have your 5, 3, 5 in your ABC, right? So you're basically saying at the A to the B wave, you have your 1-to-1 extension. Boom, the 1-to-1's hit. You can do a few things like look at, all right, where's the value here? Did we come up to the value area low? We didn't, so there's no confluence there. You can probably look at things like where's the anchored VWAP from this level or from the wave 2 high. Wave 2 high comes up into this 1-to-1 extension. You have kind of a bit of a range in here. Well, then you're looking over there saying, all right, we've tapped the 1-to-1 extension. This is likely to be wave high. Now we should be looking for an Elliott wave count. I'm starting to see a failed wave 1. You know, here's your 2, 3, 4, 5, boom. There's your wave 1. Take the short here. Here you have multiple opportunities, right? This one was a little bit tricky because you had a nesting structure, right? So in terms of why this was so damn aggressive, it's a nesting structure. And if you look at the, let me see if I have my count in this, bear with me. Wave 1 of C. Yeah, so if you look at this from here, this is like, you know, for you Elliott wave lovers, this is like super This is insane, right? Let's get rid of this noise here. All right, so this is your nesting structure. So here you have a 1 2 1 2, and then your wave 1, right? But what you're saying is, you know, what comes after 2, right? Your large wave 3s. What you're saying is, all right, here's a 1 2. So what's next on that? There's a 3. Here's another 1 2. So there's a 3. And then you have your larger, obviously your wave 1, right? So there's a 3. So what you have is a wave 1 of 1, a 3 of a 3 of a 3, right? Because all of a sudden, here's your next wave. Your next 3 is going to be insanely aggressive, right? And it's traversing through what? The major value that we've built up. Lost the value area high. You have a 3 of a 3 with a large profile like this. That thing's going to nuke, right? So if you take a short trade up here, it's going to be very, very, very profitable. So understanding Elliott Wave, what it's doing, where it can take you, very, very profitable for swing trades and, you know, getting you to those larger trades, right? That's kind of what I've done from 97 to 81,000. That's what I did from 106 to 89, right? And in terms of all of those Elliott waves, right? This is our wave 3 high, right? It's very simple, right? 115,000 to 101. Well, what happened at 115,000 to 101? Well, this was our wave 2 high of 115,000, right? Then we look for the straight, you know, the swing trade down, right? All right, here's our wave 2 of our larger wave 3. Well, we simply short the 106 high, right? And we look for the wave 3. It's very simple, very effective, right? And when you kind of get used to that Elliott Wave motion, you're going to have a really good and fun time trading instead of being confused all the time. So yeah. So that's really what I'm really, you know, happy to show you guys about. You know, again, NQ, we rocked NQ, we looked at Bitcoin, where we're at, where we can go locally, everything kind of happening in between. There's a lot of stocks that I'm looking at right now. You know, we've obviously taken the long from, you know, this lower value, had a good 8% run up. Actually, I think that was more than 8%, right? Yeah, 10%. Ultimately looking for larger expansion upwards. We'll see if we can get it, right? If NQ can play ball. LTH, this is one of those this is Elliott Wave for you guys again. This is LTH, Lifetime Fitness. This is one of those, you know, again, here's your wave 1, your 2, 3, correctional 4 in the white count. They had a WXYXZ, triple corrective. You take the long when the corrective is kind of based and done. And then you look for the 1, 2, you clearly see 3, 4, 5. And that's ultimately looking for almost 100% gain, right? We've got about 70, let's see, what do we have here? 74%. So it's very simple, right? When you have Elliott Wave, you trade it with AMT, and then you have a good time with it, right? It's the same thing for AMP, right? AMP is just a monster right now. You have a correctional base of an A, B, C, D, E triangle. So here's your triangle, right? Kind of in your, you know, here's your, you know, triangle that you're kind of basing a higher level structure. Looking for one of these, right? Maybe we have another rotation down and then we break out. It's very simple. But ultimately, Elliott Wave helps you map that out, give you a context of if you're in a correctional, when's the next impulsive wave, and so on and so on, right? Same with like Tesla, looking for 327 on Tesla. Yeah, I mean, there's a lot to look for. You know, Amazon's a really good one. This one's going to be, probably look for some shorts here at the value area high of this overall range. This one's going to take a while. But you can look at, you know, short trade this down for a 20% gain. But what I'm looking for is kind of this basing structure of flat top triangle, come up into here. You look for the long setup, and you have a very, very big swing potential for something like Amazon, depending on where you base at, right? So applying the same frameworks over and over again, it's a proven framework. It helps. I would say AMT is obviously just the 100% way to go. You know, AMT is going to get you to a lot of places. For example, just for today, you know, good example on the point of control, good example on the back test of the value area high. But overall, you know, if you learn Elliott Wave as well and you want to get into swing trading, you can definitely do that and just have a really good time with it. So there's a lot of things you can do. I would say use AMT as your base. That's what we teach at Orochi. And if you're curious about Elliott Wave, you can definitely get into stuff like that, and it's going to help you a lot more for swings. I think it still helps to answer your question, Cesar Sanchez. Yeah, Elliott Wave good for scalping, 100%, right? It's very good for scalping and intraday. You just have to understand your kind of local count, where things are happening. And then, you know, you can go from there on where you're going to have a good time. Because, like, if it, in here, right? Let's use this as an example. In here. Let me see. Let's get my count back up. Where's my count? I mean, like in here, for example, we can do this count right here. You can clearly see the wave 1, the 2, the 3, the 4, and the 5. This is a very minute count. This is your minuscule. We'll make this, for shits and gigs, yellow, right? So from an intraday perspective, yeah, because once you kind of have your counts here, right, you're able to predict a lot of things. So from wave 1 to the wave 2 high, there's your kind of 1-to-1 extension. You almost hit the 1-6-1-8. Just so you kind of based in there from a scalping perspective. You know, if you know you're in a wave 2, where then you have your wave, 1, 2, 3, 4, 5, you can scalp all of those, and then you layer in your AMT framework and say, well, we came out of value. It's likely that we're not going to fill this. You take the short back through value, and you can continue to scalp or intraday trade those all day. You don't have to swing trade. So, yeah, definitely. You just got to get really granular on swing Elliott wave for intraday and scalping. But yeah, it's very effective, very powerful, guys. So I hope you guys enjoyed this video. Just add me in the Discord. You guys got questions. Otherwise, happy Friday, guys. Hope you have a good weekend. I'd like to see you guys in a Rochi if not. Cheers, guys.